Nvidia just had the largest one-day decline in the history of the stock market. Nvidia shed almost $600 billion in market cap, the biggest one-day loss in U.S. history. Nvidia shares plunged nearly 17% in a single day, all because of a new Chinese large language model called DeepSeek. But was today's sell-off justified? Or were investors just panicking and we're going to see Nvidia shares return to new all-time highs soon? Is this the right time to buy the dip, or is this the time to sell and get out of AI? We'll talk about it today. We're going to hear from some commentary from a few CEOs, as well as a few stock market analysts. And we're going to do some technical analysis on Nvidia stock, as well as look at Nvidia's fundamentals to discuss whether now is a good time to buy the stock or if now is a good time to sell. For those of you who are new to this channel, my name is Stock Curry. I'm a former Merrill Lynch and Morgan Stanley investment banker, and I have over 25 years of trading experience. China's new large language model DeepSeek was released on January 20th, and over the past week, it has grown substantially. What is China's DeepSeek, and why is it freaking out the AI world? DeepSeek was founded 2 years ago in 2023. The company develops AI models that are open source, meaning the developer community at large can inspect and improve the software, and its mobile app surged to the top of the Apple App Store in the United States after its release last week. First, U.S. consumers abandoned TikTok to go over to Chinese state-run app Rednote, and now U.S. consumers are abandoning ChatGPT to go over to Chinese app DeepSeek. DeepSeek claims its R1 release offers performance on par with OpenAI's latest release. What shocked investors was the fact that the cost of training and developing DeepSeek's models appears to be only a fraction of what's required for OpenAI or Meta Platform's best products. While US companies have spent billions of dollars developing AI models, DeepSeek was able to develop their AI model with only $5.6 million. The much better efficiency of the model puts into question the need for vast expenditures of capital to acquire the latest and most powerful AI accelerators from the likes of Nvidia Corp. DeepSeek is being called a breakthrough in AI. Here is CNBC's technology expert Steve Kovich to explain.
It's very possible that this was built on top of previously existing open source models. It doesn't necessarily mean they're being surpassed, but they did this very smart thing and built this DeepSeek system on top of these existing open source models. And what that tells us is if you're like me and you try all these chatbots that have been coming out, whether it's Claude from Anthropic or ChatGPT from OpenAI, I personally don't notice much of a difference. They've been super commoditized. Meta's Llama is incredibly impressive based on how much they put into it, based on how quickly they were able to get it out there. Apple Intelligence, not as good, at least the reviews aren't as good, but they did do it on their own. They did do it in a cheaper fashion than some of these other hyperscalers we talk about all the time. And then let's spin it forward. We're approaching earnings seasons for all these hyperscalers, guys, and we're going to start hearing questions again about why you're spending this so much when we see people on the other side of the planet doing it maybe for a lot cheaper. We think. To my point, we're not sure, but this is where this fear is coming in that, oh my God, they were able to do this. We're talking about $500 billion investments from OpenAI and Oracle, and here we have this Chinese player, $6 million or whatever. That's insane. That's scary.
And users were eager to try DeepSeek's new model, with DeepSeek soaring to the #1 spot in the Apple App Store.
Now, consumer adoption marks a fundamental shift in the AI race. Until now, much of the momentum has been developer-driven because this is an open source model. So that means that developers can use and tweak the model to suit their own needs, whether that's removing censorship or building entirely new applications on top of it or using its infrastructure. And when it comes to a polished consumer-facing app like DeepSeek on the App Store, this risk is amplified. Consumers receive the product as it was designed, and in this case, parameters set or censored by the Communist Party of China. Its rapid climb to #1 on the App Store suggests that millions of consumers outside of China are embracing an open source tool whose outputs are, at least to some degree, filtered and influenced by Chinese government priorities. Put another way, this makes TikTok look like a warm-up act.
Keep in mind, the breakthrough with DeepSeek is not in the fact that DeepSeek is significantly better than OpenAI or Meta AI. Rather, the breakthrough is in the fact that China was able to develop this large language model at a fraction of the cost of what US companies are spending. This has put into question the need for these very expensive chips from Nvidia, such as their latest Blackwell chips, as well as the newer chips that they're currently developing. And that has spooked investors into thinking that people are going to spend less money on their most advanced chips. And as a result, that is what caused the major Nvidia sell-off.
What the Chinese did show is that using our own technology, we can even get efficient as well. So it's a good thing in the marketplace, but it's going to be a shocker for the next few days as people try to digest what's going to happen to an Nvidia or what's going to happen to an OpenAI if this happens. And the reality is, no, what they showed was we can take an open source model, we can make it available and drive down costs like we did with the internet. Because right now what we have with AI is centralized, it's closed, it's more expensive, and there are a few players. And in the open source model like the internet, it was decentralized, more players, cheaper, and available to everybody. And that's a good thing in general for AI. So once the market digests that and realizes that China is not as far ahead as it really as what the American companies are, they'll realize that, hey, the West is still ahead, and of course we'll see the stabilization.
This sell-off in Nvidia stock today was significant. But are those fears founded in reality, or are they being blown out of proportion?
I think there's a component of today's sell-off where people are very reasonably recalibrating their expectations for how big the total addressable market for new GPU sales is. But then I think there's an even bigger component that's just speculators being unwound. This is the most over-owned stock in the market, and for good reason. People have absolutely gone crazy with options trading here, with leverage. We've got vehicles that are 2x NVIDIA. We've got all kinds of zero data expiration, weekly options. It's an absolute casino that's been built on the back of a legitimately amazing growth story. And so I think if you didn't have that circus in town, you'd probably see the stock down 5 to 10%. But because you have all that leverage, you're seeing much more.
Despite the hype around DeepSeek, it is not the fairy tale that everybody believes it to be. It certainly has some problems. DeepSeek's overnight rise to fame strained the system and also drew interest from a cyber attack. By Monday afternoon, it was clear the overwhelming interest in DeepSeek services was taking a toll on the company's system. Currently, only registration with a mainland China phone number is supported. It was the company's longest major outage since it started reporting its status last week. And reliability problems aren't the only issue DeepSeek is running into. Like all other Chinese-made AI models, DeepSeek self-censors on topics deemed politically sensitive in China. Unlike ChatGPT, DeepSeek deflects questions about Tiananmen Square, President Xi, or the possibility of China invading Taiwan. And the way that DeepSeek generates its data also means that it's not as accurate as other AI models. While other AI models look at every single word that is put into the prompt and evaluates every word independently, DeepSeek evaluates phrases. As a result, it's not as accurate with more detailed prompts. DeepSeek ranks third on Chatbot Arena's large language model leaderboard. It ranks third behind ChatGPT and Gemini, which are OpenAI and Google products. Accurate AI models are always going to require the latest and best NVIDIA chips, meaning a lot of the fears that caused today's sell-off may have been blown a little bit out of proportion. But what DeepSeek did do is revealed a flaw in the US stock market. DeepSeek exposed market risk hiding in plain sight. For all the strengths of the US economy and stock market, the index's composition is tilted strongly in favor of the spectacular AI story and the premise that we've correctly identified the market winners. Odds are that we have the narrative at least a little bit wrong, and investors should expect to pay for their lack of true diversification with ongoing volatility and perhaps even subpar total returns. The Magnificent Seven make up a third of the S&P 500 by weighting and half of the NASDAQ 100. That concentration is a big reason why a Goldman Sachs Group report in October suggested that the S&P 500 would deliver an annualized total return of just 3% over the next 10 years, or about 1% per year if you adjust for inflation. The problem with the NASDAQ and S&P 500 being so heavily weighted towards AI stocks is that today's major sell-off caused investors to completely overlook the fact that the overall stock market actually performed quite well on Monday. Consider the following facts about Monday. 328 stocks on the S&P 500 were up. More than 50% of the stocks in the S&P 500 rose on Monday. The median stock was up 0.7%. Among sectors, healthcare, consumer staples, real estate, and financials were all positive on the day. The reason the S&P 500 and NASDAQ fell so much on Monday is not because the overall market was down. The overall market was up. The reason the S&P 500 and NASDAQ fell so much is because they are so heavily weighted towards AI. So when AI goes down, the overall market goes down. It's always technically possible that today's index giants continue to outperform, but history is working against us. If the market truly underwhelms over the next decade, it may well be in the form of a crash followed by a long, grueling recovery, rather than 10 years of nearly flat returns. Investors are fearful of a 2000-style dot-com bubble. As I explained in my video yesterday, PE ratios on some tech stocks are 200 plus, and forward PE ratios on Palantir are even worse at over 300. We have not seen forward PE ratios like that since the dot-com bubble. And when the dot-com bubble burst, it caused the S&P 500 to fall by 50%, and it caused the NASDAQ to fall by 90% over a 2-year period. The S&P 500 and NASDAQ then took 15 years to recover. And that is what has people so fearful, is that we are in an AI bubble and the bubble is bursting.
The reason this is such a game changer is that A, it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use. So ultimately, this is good for global growth. It is good for global productivity. It is positive for global stocks, but it deeply undermines the massive premium that we pay for US mega cap stocks, that exorbitant privilege that we've got. And therefore, I think this is the catalyst that people are looking for. Combined with it is a perfect timing of Trump really kind of putting an extra cost on US trade. I think it is the catalyst to end 15 years of US stock market exceptionalism.
But despite all of the fears around the AI bubble bursting, DeepSeek is actually a good thing for AI stocks, especially Nvidia. Nvidia calls DeepSeek excellent AI advancement and dismisses concerns. Nvidia said in an emailed statement, DeepSeek's work illustrates how new models can be created using the test time scaling technique. leveraging widely available models and compute that is fully export control compliant. Keep in mind that DeepSeek was built on top of already open source large language models such as OpenAI and Meta AI. Nvidia's shares plummeted Monday in one of the biggest sell-offs in history on concern that DeepSeek's offering reduces the need for the expensive type of hardware that the US chip company offers. Nvidia's statement, however, points out that inference, the work of running AI models, nonetheless requires a lot of its products. Inference requires significant numbers of NVIDIA GPUs and high-performance networking, NVIDIA said. And this is why DeepSeek is actually a good thing for NVIDIA stock, because DeepSeek was built on NVIDIA's chips. Yes, it was built on older NVIDIA chips, but it was nonetheless built on NVIDIA's chips, meaning this now opens up the door for smaller companies who may have stayed out of the AI space for fear of spending too much money to be able to now come in and build their own AI platforms on top of already developed open source AI. And that means more companies will now have the opportunity to come in and build AI models after buying NVIDIA's chips. NVIDIA has the best chips for AI inference. And yes, AI can be built on NVIDIA's top-of-the-line Blackwell platform, but it can also be built on older GPUs such as their H200, their H100, and even regular gaming RTX technology. So despite today's panic selling, this actually appears to be a good thing for NVIDIA, as it will probably cause more companies to buy NVIDIA's chips. Those large companies that were already going to invest billions of dollars into NVIDIA's latest and best, highest cost chips will continue to do so. But this will also now open up the door for smaller companies to invest money into NVIDIA's older chips, which should, in theory, just increase NVIDIA's revenue. Now, from a fundamental and technical standpoint, NVIDIA has never looked like a better buy. Fundamentally, the mean historical PE ratio of NVIDIA over the last 10 years is 52. And currently, the forward PE ratio on NVIDIA is a lowly 33. So from a fundamental standpoint, NVIDIA stock appears to be significantly undervalued. But there are technical reasons why now is the best time to buy NVIDIA stock also. Take a look at this monthly chart of NVIDIA, and you will see that for 2 straight years, NVIDIA has never dropped below the 10 EMA on the monthly charts. And as of Monday's close, NVIDIA was touching the 10 EMA on the monthly chart once again, meaning this could be near a bottom for NVIDIA's stock. Keep in mind, there is always the risk of a major market crash, just like we saw in 2022. And if we do get a 2022 style market crash, we could see NVIDIA fall back down to the 100 EMA on the monthly chart, which would put NVIDIA stock all the way down to $38. Based upon history, if you were to buy NVIDIA stock right now, you would make money. Based upon history, now appears to be the best time to buy NVIDIA's stock. That said, the last time NVIDIA fell this much, it took 4 months for NVIDIA to recover and hit new all-time highs. So if you do buy NVIDIA stock right now, you're going to have to be patient because it could be a long road back to new all-time highs. Also keep in mind that historically when we get a major sell-off like this, especially on a very large cap stock like NVIDIA, the fallout from the sell-off can last for many days. The problem has to do with leverage or what's historically known as credit defaults. And retail investors know this as margin. Essentially, what happens is people from all over the world have put more money than they have into Nvidia stock. So when Nvidia stock falls 17% in a single day, the following day, there are a lot of margin calls, there's a lot of credit default swaps, and this forces people to sell more Nvidia stock in order to cover their margin calls. That very often leads to further selling of the stock over the next 1 to 2 days after a major sell-off. So if we do see a lot of credit defaults and we see a lot of margin calls, we could see Nvidia stock continue to fall over the next 1 to 2 days before starting the true recovery around Thursday or Friday. So keep in mind, there's still a lot of risk around Nvidia stock. It is by no means a sure bet. But historically, it does appear to be a good time to buy the stock. This is in no means financial advice. I'm not telling you to buy the stock, but you should be aware that historically, if you were to buy today, you will probably make money on the stock. That said, in full disclosure, I do not have a position on Nvidia, and I do not plan to open a position on Nvidia within the next 30 days. Regardless of how the market performs, you can make money. Fuzz opened a QQQ put last week and over the weekend made a 340% profit. He then followed it up with a 50% profit on an Amazon day trade and a 64% profit on an SMH day trade. If you want to potentially make money like this in your portfolio, you can get all of Fuzz's trade alerts in the Stock Dads Discord, as well as trade alerts from over 20 other full-time traders. Last year, Stock Dads traders were profitable on 72% of their trades, and their trades have an average profit of 53%. You can check out the Stock Dads Discord and get more information about it using the first link in the description below.